Hello and welcome everybody. My name is Patricia Flowers. I'm going to share with you a strategy that will help you win in the Forex market with moving averages. Okay, so if you would see my chart, I am looking at NZD USD dollar on the 30-minute chart. But I'm going to go ahead and go over to the 1-hour chart so I can share with you guys this strategy. Let's go ahead and go all the way back to where I think I were. Because see, you can't really go too far with the Agimat, but I'm going to try to see. Let's go right here for a minute. Okay, so as you can see, we have a buy signal. With this buy signal, wait, first of all, let me go ahead and tell you guys the moving averages settings that I have it on. My red, I have it on 14 set to exponential, and then the blue, I have it set to 50 exponential moving averages. With these moving averages, you will see that there's a crossover signal. On this crossover signal, this is where you would enter your trade. So where you see the buy candle, there's a buy, not buy candle, but buy arrow. This buy arrow with the yellow box, this is confirming your reversal. This is just confirming your reversal. Now, this is not the new Agimat, the 2020 version, but it really doesn't matter which version you are using or currently have. They all work the same. So the yellow box with the black arrow with the yellow box. Now, when you put your moving averages on your chart, you will notice that you have an entry for a buy. Now, what you'll do is that you will personally wait until your red moving averages start crossing above your blue moving average. So when you see this, this is where you would take your entry. You would take your entry right about here. And this is where you will avoid tons and tons of drawdown. You will barely have any drawdown when you take your approach like this. And then how you exit is you basically want to exit where you see the next crossover arrow. So you can either get out at this this dark quarter point, which I recommend that you set and take profit to a desired amount that you choose. Now, this quarter point will definitely help you to secure your profit sooner, or you can get out at these dotted lines here to secure your profit. So you would have had 27 pips here, or out of 40 to 50 pips here. Now, if you closed here, you would still end the day with 23 pips. Now, you don't just end there. You want to try to take your trade. Hold on, what is happening? You want to take your trade when you see this next black arrow, so that you don't take it right away. You get in when you see the crossover. So when you see the crossover there, you take that trade and you ride it all the way down to the next crossover. So it's going to continue. So let me zoom out a bit, guys, and see. Let me just show you your next trade. So it really don't matter the trade that you take. The first trade will probably be a little bit of pips, but that's okay. You're securing money. So when you secure your profit, your next lot size could be just a little bit bigger, or you could keep it the same if you choose to be safe to keep testing the strategy out. So what it does, you want to get in at the crossovers, and that's how I would technically trade this here pattern. And I would get out at this quarter point or this dark quarter point here, being that, to be a safe trader, to make sure you're securing all the profits that you can. But if you want to wait, you can wait for this moving average crossover just to get in for another trade. And right there at this crossover was 96 pips. So that is awesome, guys, being that you're just trading the crossovers. And then you take this next crossover where you see this buy candle. So you want to wait for candles that signals buys. Arrows that signals a buy. And when you get your moving average crossover, you can take it there for that next buy. And you don't get out until you get another crossover. And what these crossovers do, because you're using huger moving averages, is that they are making sure you don't have really much drawdown. So when you get in your trade, you will barely have any drawdown when you're taking your trades. So that is a very good thing when it comes to trading Forex. You will barely have any drawdown. You can get out here at this dotted crossover, so you can take your 70 pips, or you can either wait for the next crossover, which is up in here for 57 pips. And that is fine, because you have to look at it this way, that you're securing profits. And as long as you're securing your profits, you're in good shape. Now right here, you might have not gotten anything, but at this crossover, you want to secure your profits, like I said, at the next quarter point. I'm not sure if I think this is just the dotted line. Your quarter points, I believe, is up here where your darker lines are. And so you will see your next buy signal here, and you could get in at this crossover. So you would barely have any losses when you're taking this approach. And you have to look at it. You got each of these signals are pretty good. So you got your little 21 pips, but you probably didn't get nothing there, depending on how you wanted to take that trade. So you have to look at it like that. And then for you to have less trades to get into, let's go to a higher time frame like the 4-hour, because I was actually looking at the 4-hour, and I thought the 4 hours was a lot better in terms of sharing where price. Let me show you in terms of showing about price action with these crossovers, because I think that you could secure more profits this way. So you get in at this crossover, you would have secured about 112 pips or 110 pips to 20 pips. You know, it all depends on you. You can get out at when you see the arrow, because the arrow probably was here. You could have got out there, or you could have got out here, wherever you decide to get out. Or you can get out at this crossover, the crossover that is literally right here. So you could get in right here at this crossover, or you could have got in right here. Either way, you're in. And this little 20 pip drawdown wouldn't even matter to you guys. So your moving averages is what's going to keep you in your trades a lot longer. So you ride it all the way down here to 325 pips, or you know what, you could secure your profit when you see it moving close, and then you can get right back in. You've got 124 pips there, and the continuation of this sell signal, you get right back in right here, and you ride it all the way down to this next area, which is 188 pips. So yeah, this is one of the strategies I'm going to go ahead and incorporate. You guys can demo it if you're not safe with it, but the strategy is going to show you, going to reveal itself to you guys. It's very simple to use these moving averages as long as you're looking at your trends, like if you're looking at the arrows or whatnot, and you're in a higher time frame. So the higher you are, the better it is. So let me go ahead and pull up another pair. Okay, so now we're looking at GJ. You see here on the 1 hour. Let's go to the 4-hour time frame, because I want to see higher. I want to see higher. Okay, so let me zoom out a bit, guys, so you can see better. Okay, so you got your crossover here. You got your crossover right on there. Right on there. And this is where you would take your trade, right up in this zone. Right up in here is where you would have executed your trade on this line. Somewhere up in that zone. That line would have gave you your entry. And you would have had barely no drawdown, probably 9 pip of drawdown. And then you could have got out here at this crossover right here for 296 pips. Now it went up 397 pips, and if you did not secure your profit there, you would have been crazy to not have done that. I would have secured quick, fast, in a heartbeat. But if you want to make sure that it don't go any further, you want to keep in the trade. But it really wouldn't matter, because you're going to still profit is profit, guys. You're making money regardless. So, and then you got your sell signal here. I would wait and hold, because if it crosses over, that means it is ready. And it's better to do it on a higher time frame, because you got your signals a lot better. Your signal will be a lot stronger on the higher time frame with these moving average crossovers. And here is your buy crossover. You buy for a short term period of time here on GJ for about 75 to 80 pips. And that's good. You just have to get out at those quarter points. Also, if I got in here at this here quarter point area, you could have rolled it all the way down to the next area or the next pullback. So when you get your pullbacks, you can get out, or when you get your crossovers, like when it's crossing over and you're in, a trade and you got a crossover, you want to get out as soon as possible, because your 4-hour time frame is definitely going to get you the most out of everything, because you're going to have less problematic signals. On the lower time frames is where your signals is going to be more all over the place. And then you got your buy reversal here. So that means definitely that is going up. And you got your crossover enter. You'd have been up in here, no drawdown. See? No drawdown, right? Whatsoever. No drawdown. For 770 pips till the next arrow here. Secure your profit when you see that box, or secure your profit when you see a crossover. But you can get back in, but you might have, let's say, if you got in right here, somewhere or right here, and you secured your profits right here, you still had 119 pips out of about 300 something pips. So what? You still have 119 or 120 pips. So what? You take this crossover right here, you're getting that back. You have to think about it. You're getting that back. And you ride all the way up until you finish, because this is basically your entry, telling you to get in. Telling you to get in that trade. So that's how you would do that. Now this buy here for GJ is not ready. So I wouldn't recommend anybody buying that, not no time soon, until you get your confirmation of your crossovers. And like I said, that's how you want to look at the market. You want to train your eyes to see, and you want to make sure you're using correct signals. That's definitely going to help you with that. So these moving averages, red signals a sell, blue signals a buy. So when your red is crossing above blue, that just means it is a buy. When red crossing below the blue, just means a sell. So red has to be above the blue in order for it to be a buy, and red has to be below blue in order for it to be a sell. So yeah, so what we're waiting for on GJ is definitely a buy. And these moving averages haven't crossed over. And our settings is 14 exponential and 50 exponential. You can set whatever color you want for those moving averages. And let's dominate the 4-hour time frame, 1-hour time frames, whichever time frame you choose. These will probably be my longer term setups with these moving averages here. So I'm definitely going to incorporate this strategy with the Agimat and just keeping my chart very, very much clean. And on Euro GBP, I have to look at this and study it with my eyes, and then I can come back with this strategy as well, to help anyone out, with a certain strategy that you may be interested in. Okay? So until then, if you are new to my channel, please do subscribe. Also, like and share the video. Until then, I'll see you next time.